Good afternoon, everybody. This is Patrick MontesDeOca here. I'm sorry for a little delay. We had some technical difficulties, as it always is the case whenever we have live anything, live entertainment, live webinars, live shows. So this is a live webinar that we're basically activating, and we are in the process of getting the a live trading room going as well at the same time, so bear with me while I set all this up here in a couple of minutes, and hopefully give a little more of a chance for some other members to come in here, usually on a late basis. But this is pretty much the structure, the agenda that I want to follow, and we're going to be moving into as soon as the platform is ready, into some really live trading here as we go along. But the first thing that I think I wanted to disclose to you is that this is a live trading room that trades futures contracts. We trade day trading programs. If you don't know me, my name is Patrick MontesDeOca. I'm the senior trading coach and developer of the Equity Management Academy, and we have basically several programs that we run. One of the things that I do, besides being a systems developer, or is I'm a published author. We frequently published a lot of information in Seeking Alpha, in Trader Planet, on the internet, with regards to the fundamental picture in the market, as it relates to the precious metals markets. And you can go on there and you can see our articles. We also write under my son's name, which is James P. MontesDeOca, that you can see there. And we are very proud that he has become the number 4 in Seeking Alpha, which I think is an excellent website that provides very objective information. And you can go there and under James P. Montes, you can check out basically all the writings that we do every week. But just to cover and just to confirm how proud I am, he's number 4 in Seeking Alpha. So moving forward here, what I try to do is try to be very transparent in providing very disclosed or very open information that I can share with, that will make the difference, you might say, in my subscribers that join the membership. And the room came up here, and I want to just put the charts here in a way that we can begin to work with the analysis here. What I'm doing now is basically I'm looking at the gold market. But this is the daily chart in the gold market. This is the platform that we use for trading every day, and I'll get into more specific about what these lines mean, and how we use basically these lines, which are coded in terms of identifying signals for us. And since I'm going to do particularly analysis on the gold and silver, then why don't we just focus basically on those markets for the time being, or the markets that we're dealing with right now. Primarily, the focus is in the gold market and in the silver market. And one of the reasons is because according to the algorithms that we produced, and a lot of the publications that you might say we've been publishing since December 22, it indicates for us that we have been able to identify a major cyclical bottom that started back that actually started on June the 2nd. You can look at all the reports that we've written on Seeking Alpha on your own, and let me use this time so that I can basically spend more time in giving you the analysis here that I think is the most important thing. In terms of looking at the gold market, let me erase all this analysis, and I'm going to start from scratch in showing you how we come to identifying the signals here. So I'm going to delete all this information here, and I'm going to run it with you live. Now, what we see here are the codes that you received the night before on the spreadsheet that you get basically the night before. It gives you the levels for today's trading, and these are the levels for today's trading. If you refer to your live master sheet, basically you can take a look at the daily codes that we send you and anticipate pretty much for the following day what the market is going to do, or where are some of the best trading opportunities. For this particular case, we're going to talk about day trading in the gold. Today's action in silver, as you can see, we just to go over the trades that we did today. This is the actual live trading room for silver, and we made a couple $100 today in silver, this is the day trading program, but I will get into more into the other programs that we have and show you how we are able to identify and take advantage of this opportunity. But we did stay long on the close as of this afternoon in basically the December silver contract and also the October gold, anticipating a swing trade that was published basically last week, and you pretty much get this information. As I said, I publish it on the website every week, or you see it on Seeking Alpha or yahoo.com, but we make a point of publishing this information on Saturday of every week. And on this report that was published on July the 10th, it told you basically that you should cover the corrections into that 1319 to 1298 level for the gold market. In fact, these are the levels that we penetrated today, and in fact, these are the action here that for the last couple of days that we have seen in the gold market. And so we have come down basically to a major level of support. This lines indicate level of support by one. It tells you exactly 1292, and the algorithm essentially starts from a neutral zone. When the price crosses the code, it becomes active neutral. On the next bar, whether it be a day or a 30-minute bar, if it closes above, it's a long signal, it's a buy signal. If it closes below, it's telling you it's a short bearish signal, and the price could come down to 1278. In this case, we're getting a lot of confirmation that these levels are going to hold, and I'll show you why. In taking a look at the analysis beyond the codes that we publish daily, we have integrated in our program the applications of basically the Elliott wave principles, Gann principles, and Fibonacci principles. And we've basically integrated our own algorithms, which is a formation and integration of Vedic mathematics along with Elliott wave, Gann, and Fibonacci principles. If you're familiar with those forms of analysis, they're classical analysis, particularly with Elliott wave, that measures the energy of the market in waves of 8 counts, 5 going up and 3 coming down. W-Gann does the square of 9 and anticipates basically trend lines that give you geometric configurations of support and resistance levels. And Fibonacci uses obviously its own numbers that are called Fibonacci numbers, which are used to identify major levels that we can expect a turning point in the market from a cyclical and energy point of view. What we have found is a common ground in all these masters of analysis that points to India. They went to India, spent many years in the Middle East, India, and learned the Hindu-Arabic numeric system, which is basically an index of 1 to 9, and it is the basis of modern mathematics. For many, many years, it basically has been the basis of geometry, modern geometry, algebra, and was brought into Greece by Pythagoras, and Pythagoras, and then we go into the Pythagorean theory, and all the fathers of Western mathematics basically had this in common, in that they all learned the Hindu-Arab numeric system. And so I found it very interesting that all of these icons had one thing in common, and that is that they went to India. So we basically looked into that and discovered an incredible synergy that it's called Vedic mathematics, that we integrated in coming up with the algorithm that was created by the Equity Management Academy that we use and we apply right now in terms of our trading. And I want to get right into that right now. So in analyzing the daily market here, what we have here is the gold market from the low that was made of 1180.81 in December 31st, which was the expectation that we had that on the 24th of December that we would essentially see some kind of a major bottom developing in the market, and that's exactly what happened. We got a rally all the way up to about March, and so now we identify a low and a high, and it measures exactly 180 days, which is a 45-degree angle in the square of 9 in using Gann measurements. And it is basically the half point before the completion of the move. So what we do here is we're going to analyze the line balance between the market here, and for that we use the Andrew Pitchfork analysis. So let's see what we get by taking the low. Let me see here. We're going to take the high that was made in March, the recent low that was made in June, and this gives us basically the resistance levels that we have. But I want to take a look at the upside analysis, and for that let's go back to the ultimate low that we saw of 1181, the high that we saw in March, and the recent low that we saw in June. Now, what you see here is the synergy that this analysis has, that is able to identify for us that we are right at a major level of support. And we do anticipate now that this level will hold. This is a secondary confirmation using Andrew's pitchfork that we have found a major bottom today. In fact, the algorithm says buy 1292 to 1278. So we're in the zone. We hit the zone today by making a low of 1292.6. That's pretty close to 1292 analysis or anticipation that we had yesterday. So now where do we go from here? Let's see how we can calculate the resistance levels or the target zones. We already have defined by using the algorithms that we created where the sell 1, sell 2 levels indicate. And that's exactly where, what happened today, coming into today. Or if you had been long since June the 2nd, you would have been targeting the 1342 area. The high today was 1346.80, and the weekly report that was published last Saturday was anticipating basically 1354 to 1368. So we seem to have reached, obviously, a resistance level, and at the same time, we came right down into a support level all within the last 3 days. And that is a perfect correction. A 3-day correction is a halfway of the move. Now, let's see where we are in relation to using Fibonacci retracements from the high that we made in March to the recent low, or where we can anticipate a retracement to come in. And for that, we use a Fibonacci retracement from the high that we made in March to the recent low that was made recently, and we get a confirmation basically that the price action has upside targets, which we have seen basically up to about 61%, which was about the 1335 level, and found resistance coinciding with the code sell 2 and 1 levels of 1342 and 1331, which came in precisely as scheduled. Now that we've come down to this level here, we can anticipate the market to rally all the way up to the line of balance, which is approximately the 1421 level. Okay? This is the first level of resistance. If we close above 1421, then basically we're going to move up to the next level up there, which is in the 1541 level. The 161.8% golden ratio target is about 1489. Closing above 1552 will pretty much put the market up to the next target, which is the 261.8% of $1,642. Okay, so we have defined now by using the Fibonacci retracements where the price is headed for in the intermediate future. Now, in order to find out the time frame when this is going to take place, what we do is we use the Fibonacci time ratios, and so let's see what it tells us. Once again, using the high that we made in March, and the recent low that was made on June the 2nd. Let's see if we can do this right again. Okay. Now, this tells us the expectation in terms of the time and price where we can expect this to take place. So here we've been able to identify the next day to be July 18th, not too far away. By the action in the price, we have been able to anticipate that this correction is bringing in another major low by the 18th of July. It coincides with a major level of support, Andrews pitchfork support, the code below, and as well as the Fibonacci retracement of 23.6%, which is major level of support. And that price basically is in the 1246 level. I'm sorry, 1291 level. The B2 level is at about 1279 in that vicinity, but the 1291 level should hold as we speak based on this information. Worst case scenario is that it could come down and test the B2 level here, which is about 1281, 1280 in that vicinity, and that would complete and validate the completion of the second wave correction. What can we anticipate for the upside in terms of some resistance levels? For that, we can take a look at fan lines and see from the low that we made in June the 3rd to the recent high what we can anticipate. And in here you can see basically, let me get rid of this fan 2. You can see that the fan lines, which are Gann lines as well, form or begin to form a synergy into this area that we're talking about, into this area of support. And this validates more that this level is a cluster of various different metric indicators that we're using that confirm a high probability that what we have is a major bottom. The algorithm confirms basically that by the time the price touches the code, it activates an active neutral position, and if the market closes above that the following day, if it's a day, then it activates a buy signal for conservative traders. For aggressive traders, which is what we did here earlier, we took the signal that it closed above it, and we went long based on the fact that we published this information by using the weekly VC price momentum indicator algorithms last Saturday, and both of them came in pretty much during the same time frame. So as you can see here now, we're beginning to formulate a very clear picture in terms of what expectations we have in terms of price, in terms of time, as well as support in resistance levels. It is my belief, based on what we are seeing here developing, that this market has the potential to rally all the way up to the 1600 to 1640 level, potentially into the September time frame. But I do believe that we will challenge the 1550 level by that same period of time. And it indicates to us that this rally, if in fact this is a bottom confirmation, which it appears that it is, that this next rally should last all the way up to October 7th, actually, beyond September. And beyond October 7th, we're looking at March, if that is the case, depending on the price action into this time frame. Once again, a high price action into the time frame or into the ideal levels of the code or the Fibonacci retracements will basically tell us the actual cyclical expectation with very high probability. If we're expecting a low, the price should be making a new low into the time frame. If we're expecting a high, it should be making a high in terms of price in the expected time frame. So far, this appears to be a second wave corrective Fibonacci pattern. The first leg was made from June to March. We have a little bit of a correction here, and we're headed basically up towards this 1436 level. That seems to be the line balance of the between the high and the low of this previous move. This is basically the signal in terms of the gold market, and now what we're doing is basically using the signal that we're getting in the gold market to be able to trade derivatives, like for example AGQ that we are trading very much aggressively here the last few days. This is an ETF that is a gold ETF. The volatility is 3-to-1 to the price of gold. So if the gold market moves up 10%, this ETF will give you 30%. But at the same time, if it goes down 10%, this will also go down 30%. It's a very volatile ETF for aggressive traders that are looking to build equity aggressively. In using the analysis that I just showed you for this market here, it confirms as well that we are in a major level of support, the 50% Fibonacci retracement support. We also have the fan or GAN lines level of support going up and coming down, and it appears that this is confirmation as well that this is a major buy for JNUG. JNUG is the Direxion Shares Trust Junior Gold Miners bull, 3 times the volatility of gold. We're using for trading in the silver market basically USLV, which is another ETF that is an aggressive ETF. It's the Credit Suisse Velocity 3 times long the silver market, and we feel very strong that we have seen also a major bottom in this ETF, as you can see from once again the rally that has been established from basically the low that was made on June, or made around the 30th of May. We have seen a little bit of a correction here. Possibility is that this thing could, for all intent and purposes, come down maybe another 10%, but it's within the criteria because it is an aggressive way of building equity. And you know, building from the beginning of June to where it is right now in 30 days, this kind of return going from 36 to 50, it's a pretty aggressive return, and this is only for aggressive traders that you know, can stomach this kind of volatility. So this is what we do. We use the gold and silver markets as indicators, and we basically are accumulating positions very much aggressively, as you may very well know, in instruments that essentially are JNUG, SLV, USLV. We bought additional 500 shares today at JNUG at 26.69. We bought 500 SLV January 16, 23 calls. These are leaps, and we paid $131 for an option all the way till 2016. It is unheard of. When you can buy an option which is limited risk and risk $131 pretty much at the money, all the way till 2016 with time value, you're buying insurance. You're protecting your option so that if the price goes from 20 to 40, you would be in the money by $1,700 on a 131 investment. We're looking to build aggressively here at the live trading room of the Equity Management Academy. Our profits are showing since the beginning of the year, basically $400,000 on an investment of $150,000. And if you follow what we do here at the live trading room, there is absolutely no reason why you should not show the same results. What we're looking to do here at the live trading room is look to make $1 million by the end of the year in trading the gold and silver markets, derivatives, and options in the precious metals markets primarily. I'm going to leave the next few minutes for any questions that